What is going on, guys? Welcome to our Finance Tuesdays. I hope you're doing really well to start your week. We're going to be talking about the importance of being financially solvent. Look, if you're not making consistent income, growing your income, keeping your money in the right places by saving on a monthly basis, if you're not reducing your debts or striving to be debt free, you got to evaluate the situation. Because if you're not in a position or going to be in a position where you can cover 6 to 12 months of your expenses, that includes your rent or mortgage, your internet, your electricity, the daily things you need to survive financially. Start there. Because if you got your little $1,000 emergency saves, I hate to break it to you, that's not going to last long. You want to make sure you build this correctly because if you're not solvent with these things, emergencies are going to happen, whether we like it or not. Something could happen to our health, something could happen to our job, something could happen to the house, especially if we own it, to our cars. We know this already. Cars need to be maintained on a year to year basis. You got to get the oil changed. What if your engine blows up? What if your brakes stop working? Like these things happen. And if we don't have the emergency savings set up properly to cover these expenses, what's our next step? Well, if we don't fix it, we can't use that item again. It's going to keep breaking down. If it's our car, well, we need to drive to get places, right? Or we can take the bus or an Uber where that becomes very challenging and inconvenient, and that can slow us down. And we can go another route and just borrow the money, and now we have credit card debt. So if you're in a situation where you don't have the emergency savings that you would like, start there. Save on a month to month basis, put money away. That way you're properly covered. Especially what if you lose your job? What if you get fired, unfortunately, you got to go find work. Well, you don't want to just collect unemployment checks and you're barely surviving. You want to have some emergency set up. So if something does happen, you can cover yourself for at least 6 months. That gives you time to look for work and get some income and rebuild, your finances. Start there and make sure you're, properly solvent. Think of it like self-care. You got to eat to survive, right? You got to properly, keep your hygiene up. If you're not showering, you're going to smell, right? If you're not eating, you're not going to probably be in the best shape. You got to do the daily things and think of it that way with finances. You got to make sure you're solvent, that you have the right literacy down for finances. And if you don't, you go backwards. My personal thing that I'm waiting on, one of the goals is I want to eventually buy a house with my wife, but I'm waiting. Here's the reason why. I want to be debt free completely. I want to have no student loans, no car payments. By next year, I won't have my wife's car payment or Sally Mae. But I'm also thinking at the same time, that's a great step, but I know a car needs to be replaced in the future. Eventually, my Honda Civic has to be replaced. But at that point, all we'll have is our federal loan payments left to take care of. Now, I could get a house at that point, but I'm not going to. And the reason why is there's maintenance required. And if I'm spending, like, let's say one year I'm spending $10,000 to fix the house, well, I'd rather use that $10,000 either to save it or to pay off my loans. That's just my personal opinion and why I'm going that direction. And once I have enough money in my life insurance policies between me and my wife, then I'll go out and buy the house because we're properly solvent. And then we're in a situation where we can handle the bigger expenses that will come with a house, right? Because you got to fix things and things do break down. And if I'm not properly solvent to handle those situations, well, then I either let it sit there and get worse. And I don't want that to happen. So I got to probably borrow the money. That's not ideal. Or I empty out my entire savings when I should still be building it. That's not attractive. And what if I still have debt? Well, guess what? I'm not paying for that. I'm taking care of this problem. And if I have kids at that point, I got to feed those mouths, right? That's why I'm waiting because I'm in no rush to go through that process. I'd rather have no debt whatsoever and be solvent and continue to build my life insurance policy. I've been doing it for 4 years. I'm going to have at least $30,000 at the end of this year in my cash value and be able to go out and take care of, like I said, my salary May next year and my wife's car payment. Her car loan will be done. Now, even though that's a great step, I understand that I'm not where I need to be yet because I want to make sure I've got 6 to 12 months of my expenses taken care of in case something happens to my job or her job. And it's so important to think that way because we don't prepare for emergencies. We also don't think about we want to invest right away, and that's great. I'm all about investing. That's going to be my next step after I'm debt free. But before I get there, I got to make sure I'm taking care of these things. I got to make sure I'm taking care of our solvency. And if we're not doing that, then we're just going to keep running this cycle. And if we don't realize that emergencies will happen, that situations and circumstances will happen out of our control, well, what do we do? if we don't have the money. These are just some things you want to consider so you can build wealth correctly, because we don't want to be in a situation where we're gaining momentum and then losing momentum. That's not ideal. So just be solvent. Make sure you're taking care of yourself. Make sure you have a goal in mind and that you're properly saving and putting it in the right places. That's why I talk about life insurance, because it's one of the very few places where your money is safe. It grows tax free. You can use it, however you want. I think you should only use it to pay off your debt, invest, and invest in personal development. That's it. So I hope you guys enjoyed this video today. I'd love to hear your thoughts on what you think about financial solvency, where you're at in that process. Make sure you guys like and subscribe to the channel, and I'll see you next time.